The team at Technology for Hotels knows how busy you are, so we've created this concise briefing to keep you up to date on key happenings in the hotel industry. Let's dive in.
It is great to be here. And honestly, looking at the slate of news for this week, busy is a massive understatement. The industry is effectively moving at two very different speeds right now.
It really feels that way. I spent some time with the reports, and it seems like we have this, massive infrastructure boom on one side.
Right, people are pouring concrete, building these huge towers.
Exactly. Aggressive expansion in China. But then, on the other hand, there's this very subtle, almost invisible shift happening in the soft layers of the business.
You mean the pivot toward everyday longevity and
Yeah.
that silent revolution in AI?
That's it. It's like we have hard assets versus soft power. And I think our mission for this deep dive is to figure out how those two worlds intersect. We need to understand why a private equity firm is turning a hostel into a boutique hotel,
Huh.
or why longevity is suddenly a scalable model for Accor.
And maybe most critically, why the era of the hotel API might be coming to an end.
That's the one. That's going to be controversial. But let's start with the human element first. Wellness. It feels like every week we talk about a new spa, but this week seems different. It's less about pampering and more about performance.
That's a good way to put it. We aren't just talking about a massage room in the basement anymore.
No. The big headline here is Salter Brothers Hospitality. They're launching an entirely new brand called Aliva, debuting in 2026.
Right, and look at where they're putting it.
They've listed Ardor Milton Park in Barrel, the Intercontinental in Coogee, and Lillian Fells in the Blue Mountains. These are serious high-yield assets.
They are. But the real insight here isn't just the location, it's the strategic intent. They've partnered with a Moravita, sure, but the strategy is scalable wellness.
So they're betting that wellness-led travel isn't a niche anymore.
Exactly. They are creating a brand that can be dropped into high-end properties to drive revenue per square meter in spaces that, used to be underutilized.
So instead of a generic massage room that sits empty half the day, you create a destination brand that pulls people in specifically for the treatment.
Precisely. It becomes a primary driver of the booking, not an afterthought. But if Salter Brothers is the high-end, exclusive version of this, Accor is doing something, well, much more radical with Novotel.
They're trying to democratize it.
They are.
This is the longevity everyday concept. I have to be honest, when I read this, I was a bit skeptical. Longevity usually makes me think of billionaires trying to live forever.
Right, with blood transfusions and things. How does that fit into a mid-scale brand like Novotel?
Yeah.
Well, that's the challenge, right? Longevity is a buzzword that can feel alienating. But Accor is smart here. They are stripping away the sci-fi stuff and focusing on what they call the longevity economy.
And they've broken it down into 4 pillars: sleep, eat, move, and meet.
Which sounds basic.
Very basic. We all sleep and eat.
We do, but rarely well when we travel. And the execution is where the value is. They're upgrading bedding for sleep hygiene. They're introducing plant-forward dining that isn't just a sad salad in the corner. And they're pushing energy-focused meetings.
Energy-focused meetings. So I assume that means we stop serving pastries at lunch so everyone doesn't fall asleep at 2 p.m.
That is exactly what it means. But think about the business case. If you are a corporate travel manager and booking your team at a Novotel means they'll actually be alert, that's a competitive advantage. It's moving wellness from luxury to productivity.
It's integrating lifestyle into the stay so the guest doesn't have to hit pause on their healthy habits. That makes sense. It creates stickiness.
Correct. Stickiness is the goal. Now, while Accor is tweaking the guest experience, other players are just focused on sheer scale. We need to talk about the physical expansion.
The hard assets. Okay, let's look at the Sunshine Coast in Australia first. That region has felt quiet for a long time.
Decades, actually. The Sunshine Coast has been a fortress for domestic tourism and small operators. But Avani is changing that. They're opening the Avani Mululava Beach Hotel in April 2026.
And this isn't a small renovation. It's a $50 million project, 180 rooms, full service.
It's a huge signal to the market. When a brand like Avani commits to a full-service build, it validates the destination. It tells investors, we believe this market can support premium rates year-round.
Not just during school holidays, it's a maturation of the market.
It is. And speaking of minor hotels, they're on a tear globally. 40 new contracts last year alone.
Wow.
They're sitting on over 640 properties now. But the most interesting part of their 2026 outlook isn't just the room count, it's the financial engineering. They're planning a hotel REIT for mid-2026.
Okay, let's pause on that. For our listeners who might be more on the ops side, why does a hotel operator want to launch a REIT?
It's all about capital efficiency. We call it asset light. Basically, Minor can take the hotels they own, sell them into this trust, and get a huge injection of cash back.
And they can use that cash to grow even faster.
Exactly. But, and here's the key, they usually keep the management contract. So they still run the hotel, the flag stays on the door, but they don't have their money tied up in the bricks and mortar.
So they sell the house but keep the keys.
Perfectly put. It allows them to scale at speed. And if you look at IHG, they are playing a different version of the scale game in Greater China.
The numbers there are just staggering. 1,400 hotels open or in the pipeline across 200 cities.
I mean, that shows you the depth of the Chinese domestic market. But IHG isn't just cookie-cutting these hotels. Their strategy is highly segmented. They're going into Tier 1 cities with luxury, but they're pushing hard into emerging cities with lifestyle and select service brands.
So they're matching the hotel product to the local economic maturity.
Exactly. And they are localizing heavily. The Chinese traveler is very sophisticated now. You can't just drop a Western box into a Tier 3 Chinese city anymore.
That localized approach seems to be the only way to win there. Okay, let's shift to the investment landscape. We've talked about new builds, but there is a lot of trading happening.
Yeah, the M&A activity tells us what investors believe about the future, and this week we have a perfect spectrum of deals.
Let's start with that flashpacker trend. GAW Capital, a private equity heavyweight, just bought a backpacker hostel in Queenstown, New Zealand.
For 31 million New Zealand dollars, yeah. I love this deal. It highlights the versatility of capital. They aren't keeping it as a hostel.
Right. They're gutting it and turning it into a 69-room boutique hotel.
Which is a big pivot.
It is. Why not just keep it as a hostel? Queenstown is full of backpackers.
It is, but the yield on a boutique hotel room is significantly higher. GAW is betting on the flashpacker. The traveler who wants the cool vibe of a hostel but has a job and wants 500 thread count sheets. It also signals that offshore money sees New Zealand leisure as a safe bet.
Upgrading the asset to match the upgrading demographic, then we have EVT Limited buying the QT Auckland.
This is strategic consolidation. EVT owns the QT brand. By buying the physical building, they are securing their flagship in a gateway city. They're controlling their own destiny.
Smart. And then in Australia, Radisson is making a move in Brisbane.
The 65 Hotel Brisbane. It's part of their Radisson Individuals brand.
Why Brisbane? Why now?
One word. Olympics. 2032 seems far away, but for hotel development, it's tomorrow. Radisson knows they need a footprint there now before the gold rush really starts.
Get in before the land prices go completely vertical. It's a long game.
It is. And speaking of expansion, La Vie Hotels has signed the Mercure Rockhampton. It shows the franchise plus management model is alive and well in regional Australia.
Okay, and finally for the segment, we have to talk about the monster in the room. Hotel 101 Global in Melbourne.
You literally cannot miss this one. 540 Flinders Lane.
766 rooms. Planned to be the largest hotel in Melbourne by room count. But the model is unique.
It's the IKEA of hotels. Standardized rooms. Every single one identical. They sell the units to individual investors like a condo hotel, but run it as a cohesive machine.
But 766 rooms, that is a massive amount of supply to dump into one location.
There's always that risk.
Yeah.
But Hotel 101 is a volume play. They're not trying to be the Ritz. They are betting that Melbourne's demand curve will rise enough by their 2029 opening to absorb it. It's a bold bet.
It's definitely going to change the skyline.
Okay.
Let's move from the physical to the invisible. We promised to talk about the silent tech revolution.
This is probably the most conceptually difficult but financially important topic we have. We are moving toward the natural language web.
Okay, break this down for me. Usually we talk about APIs, application programming interfaces. I need to connect my PMS to Expedia, so I need an API.
Right. Think of an API like a specifically built bridge. It only connects point A to point B, and you have to hire an engineer to build it. It's rigid, expensive, and it breaks. The natural language web proposes that we don't need the bridge anymore.
So how do the systems talk?
They don't talk in code. They read in English. We are seeing the rise of AI agents that can look at a website just like a human does.
So if I have an AI assistant on my phone and I say, book me a room at the Avani Mululaba, the AI doesn't need a special back-end connection.
Exactly. The AI goes to the website, sees the availability calendar, reads the room description, and clicks the book button. It turns your public website into an agent-ready endpoint.
That sounds incredible for cutting out the middleman, but doesn't it require new standards?
It does. There are protocols popping up, like the Model Context Protocol or MCP. Think of MCP like a universal USB port for AI. It helps the AI understand that this is a price and this is a date, so it doesn't get confused.
So what does this mean for the battle between hotels and OTAs?
This is the multi-billion-dollar question for 2026. If a guest uses an AI to plan their trip, who controls that AI?
If the AI is built by Google or Apple and it can go direct to the hotel website, the hotel takes the commission.
In theory, yes. If your website is natural language ready, you save that 15 to 20%. But, that's a big but, the OTAs are building their own AI agents. They have decades of data on what converts.
So the battleground shifts from who has the best website to whose AI does the customer trust.
Precisely. It's a battle for customer ownership at the very top of the funnel. It transforms the web from a passive library where we go to read things into an executable platform where AI goes to do things.
It feels like we are on the edge of a massive disruption. And speaking of performance, before we close out, how's the market actually holding up?
The report card for the start of the year is a solid A. Occupancy is healthy. Sydney and Adelaide are leading the pack, driven by a strong rebound in corporate travel.
And corporate travel is the bread and butter. If that's back, the baseline is safe.
It is. The only missing piece is international visitation. We aren't quite back to 2019 levels yet. That's the growth opportunity for 2026.
Right. So we have the strategy, the tech, and the market. But none of this happens without the people. It's time for Stars in Motion.
The engine room of hospitality. We have a lot of movement this week.
Let's run through the list because it really shows where the talent is flowing. First up, Chirag Khattar is the new general manager for accommodation operations in Central and North Queensland for K-Pat Hotels.
That's a complex region. Great move.
Then we have Alejandro Eduardo Nikinga Ruiz stepping up as Rooms Division Manager at IHG Hotels and Resorts.
A vital operational role. Rooms division is where the profit is made.
Philip Kronberg is taking on a heavy hitter role, General Manager and Area VP of Operations at Mandarin Oriental.
Mandarin Oriental demands perfection. That's a high-pressure, high-reward seat.
In the commercial sector, Michelle Gatsuberos is the new Business Development Manager for rooms at Hyatt Place, Melbourne, Essendon Fields.
That airport corridor is a dogfight. You need a strong BDM there.
Varun Malhotra has become General Manager at Ridges Hotels and Resorts.
Solid brand. Good to see fresh leadership.
Now, on the development side, Chris Batterham is the new Chief Development Officer at Ovolo Hotels.
Ovolo is creative and fast-moving. I'm excited to see what Chris builds there.
Fiona Kusumano is taking over as Director of Marketing, Events, and Partnerships at Accor.
Marketing the largest portfolio in the region. That is a massive job.
And finally, sitting in the C-suite, Mark Hodge is the new Chief Operating Officer at CLLIX Apartments and Hotels.
COO is the hot seat. He's responsible for the execution of everything we've discussed today, so congratulations to everyone.
It's great to see that vibrancy. So bringing this all together, we've covered huge expansions, wellness, and robots reading websites. What's the one thing our listener needs to take away?
If I had to distill it, it's this. You need to be ambidextrous in 2026. You cannot just focus on the physical asset, the concrete, the location like Avani and Hotel 101 are doing. That's table stakes. You also have to master the soft layers.
The longevity economy, like Accor.
And you have to prepare your digital presence for the AI web to protect your margins.
The building gets them there, but the soft layers, the wellness and the tech, are what keep them and make the money.
Exactly. Don't get so distracted by the construction cranes that you miss the silent revolution happening on your own website.
That wraps up this week's 5-Star Weekly Briefing. Thanks for tuning in and staying informed with the latest in the hotel industry. Don't forget to check out our 5-Star Conversations podcast, where Brendan Granger from Technology for Hotels sits down with the industry's most influential leaders to uncover their journeys, insights, and the future of hospitality. It's a must-listen for anyone passionate about elevating their guest experience and driving innovation in the hotel world. Until next time, stay well and stay ahead. See you next week.